Okay, been through all the cash flow statements, all the production budgets, the whole thing, all the way down through the income statement. We're down to the balance sheet. The balance sheet has to balance. The balance sheet has to balance. It always balances. Assets equal liabilities plus shareholder equity. Assets equal liability plus shareholders equity. Some of you remember it as ALE or ALE. It's easy to remember beer. ALE is the balance sheet equation. Assets equal liability plus equity. So let's look at our givens. Royal has reported the following accounting balances in preparing for its budget. Financial statements. Land is $50,000. Common stock is $200,000. Retained earnings is $146,500 as of April 1st, and equipment is $175,000. So we go to our balance sheet, and we have assets equals liabilities plus shareholder equity. We start with our assets. We start with cash. We know what cash is. That was given from our cash flow statement or expected cash collections, and ending cash at the end of the quarter was $43,000. Accounts receivable is what was left over at the end of June sales. June sales was $300,000, so 25% of it is still in accounts receivable. Raw materials inventory, what was left over, $4,600 or 11,500 pounds was left over in ending inventory in raw materials, so that's 40 cents a pound. Finished goods inventory, 5,000 units at $499. That's what was left over at the end of the quarter. Land they gave us is $50,000, and equipment. Well, equipment is $367. Where did we get equipment? Well, we bought some stuff during the quarter. We add that to the $175 that was there, and we get $367,000, and we simply add those together to get $564,550. The accounts payable was 50% of June purchases of $56,800. So we have $28,400 of purchases that we still have to pay. Common stock was $200,000, and retained earnings, we take our net income and turn it into retained earnings. So our retained earnings was actually increased by the amount of our net income. So that adds up to $336,150, and if you add all of that up, it goes to $564,550, and you can see that the assets equal the liabilities plus the shareholders' equity, and the balance sheet balances. If the balance sheet doesn't balance, you have some error in your spreadsheets above. So you have to work through all of those spreadsheets to find that error. In a separate video, I'm going to walk you through how to set up spreadsheets so you can do this for yourself. But right now, just walking through the process, you should get a handle on what goes into each cell and what each cell is made up of. That was the goal of these segmented videos. The other videos will actually walk you through setting up a spreadsheet and creating the formulas in the cells. Be sure to look at those videos. Those are crucial to be able to do this easily. These are just overviews of what goes into the cells. So that was our whole overview of master budgeting.